So to start with, in our view, the discussion this afternoon and this conference comes at a very opportune moment because we've just had 1 month ago the recent report from the Intergovernmental Panel on Climate Change on the impacts of 1.5 degrees global warming. And of course, in 4 weeks from now, we will have the big climate conference again in the yearly one in Poland this time, in Katowice, where we will work hard to agree on the rules that are needed in order to operationalize the Paris Agreement. So today, just to go through a little bit, why do these challenges, what have they got to do with financial regulation? And in which way could sustainable finance help keep these global temperatures in check, basically? So in the Commission's view, and I think you've seen that through the different actions that we've undertaken, sustainable finance and fighting climate change really do go hand in hand. We have put forward the action plan on financing sustainable growth already almost 2 years ago. And this action plan identifies climate change as a priority topic. It is the result of joined-up thinking, which is, novel in a way, between climate experts and financial market experts. It is also those same people that have worked, obviously, on the legislative proposals that we have been making in the spring, and these will be impacting all of you in the financial industry once they have been adopted by the member states in the Council and the European Parliament. So these experts, their discussions are often intense and very technical, as you indicated, that is correct, but it is absolutely crucial in order to enhance our mutual understanding, because it's different worlds and we really need to talk together in order to understand each other. So you will be diving in a lot more technical details in the panel afterwards, but let me emphasize a little bit, the reasons why policy on sustainable finance is absolutely necessary. So maybe to start, after the summer, we were in the United States, indeed, where there was, in the margin of the United Nations General Assembly Week, there was also the so-called Climate Week in New York, and we have been advocating there, and as well as in many other places, more and more ambitious climate action. Now, all across the globe, people are grappling with, the damages and the impacts of climate change. We have seen Hurricane Florence, obviously, at that time in the United States. At the same time, we had Typhoon Mangkhut in Indonesia and other storms in that part of the world. And it is really it's sad, but it's helping to indicate to the people that climate change is really here around us and having its impact. Also closer to home, of course, we have been living the droughts last summer with the impacts on agriculture. And also now clearly still very low water levels, for example, in the Rhine, which is having really negative impacts on inland waterway transport, and these effects can, and in fact they do, disrupt processes that are dependent on this, what we have developed in Europe, this just-in-time delivery of materials and components. So these examples are clearly a pre-taste of the risks of what we call unchecked climate change. If we don't do anything, where are we going? The modelers can indicate very clearly that, the intensity of natural disasters will go up with higher global temperatures, and the predictability of such events will go down. So these two things go opposite directions, and this is just exacerbating the risks. Now, damages or value at risk in US dollars is in the trillions. Let's keep that in mind, especially in the longer term. And at the same time, if we do take action in order to decarbonize, that is actually very beneficial when we look at GDP growth. So that is a positive story we can also take into account. Now again, coming back to this report of the Intergovernmental Panel on Climate Change that came out on the 8th of October, that report is basically looking at what action is needed in order to limit the global warming to 1.5 degrees, but also what will, on the other hand, happen if we fail to do so. So it's a very comprehensive and timely assessment, and it does really give the policymakers, which is the governments in particular, a very strong scientific basis to act upon. Now, the report represents, let me stress it once again, a scientific consensus, and the science is very, very clear. First of all, we are already in a world where global temperatures have increased compared to pre-industrial levels to 1 degree. So we are already at 1 degree. And it indicates that, limiting global warming to 1.5 degrees can help in order to avoid some of the most devastating impacts of climate change. And it will reduce a little bit this increase of ever more extreme weather events. The good news is that the report indicates limiting to 1.5 degrees is doable. However, it makes it very clear that we have to act as soon as possible now, and we need to make use of every tool at our disposal. We also have to keep in mind that, parties have already taken commitments, and under the Paris Agreement, basically all countries have what we call nationally determined contributions. But all these commitments together do not get us there. They're insufficient, and they would take us to a world of 3 degrees. So that's, quite a bit more than where we are today. And if we continue the current rate of warming, which is around 0.2 degrees per decade, we will be reaching this 1.5 world very soon, probably between 2030 and 2050. And there we're looking at a timeline of 12 years only. It's not immediately around the corner, but still, it's clearly within the lifespan of, investments into infrastructure, business models, supply chains, etc., etc. And in those 12 years, we might be living in this world of 1.5 degrees, and let's hope we're not in a world already which is closer to 2 degrees. Now, interestingly, the report of the IPCC also gives some indications as to, okay, if we have 2 degrees, what happens? If we have 1.5 degrees, what happens? And it kind of, again, gives some good examples to make it more tangible. So, for example, in a world of 2 degrees, clearly the livability of many of the major cities in the world will become very, very bad. It will really deteriorate. Also, the oceans in a 2 degrees world, coral reefs, we can say goodbye. They will have disappeared. Whereas, on the other hand, with a 1.5 degree world, there will still be coral reefs disappearing, but this would be 70 to 90%, but not everything. Also, fish stocks, again, another example, very concrete one, would be declining incredibly with a 2 degree world. And this is, of course, economic activities for a large part of our society also. Now, again, the policymakers have to make use of this kind of knowledge and the science insights so that we determine what efforts need to be made in order to tackle climate change. I already mentioned the climate conference in December, where we need to, on the one hand, take stock of progress towards the targets established in the Paris Agreement. What have we been doing so far? Since the Paris Agreement, 3 years have passed. Have we been serious in implementing our commitments? But also to look already at, on the basis of this scientific report, what more will be needed. Because it's not just, looking at what have we done so far. We need to always keep this longer-term perspective in mind. And this is basically the message that the EU will be representing in Katowice. There will be, under the Paris Agreement, a review of these national commitments by 2020. Before that, we will have a summit convened by the Secretary General of the United Nations in September 2019, where again, heads of state and government will be called upon in order to have this reflection. Is it possible to do more for each and every country? And within the Paris Agreement, we have this 5-year ambition cycle. So again, in 2023, we will look again, where are we stock taking and what more needs to be done? Now coming a little bit to the options for reducing emissions and what we call, in our jargon, mitigation potential. Clearly, business and financial communities are relevant here because whereas the dangers are very clear, the opportunities, as I just said, of economic growth are also evident. Again, if we look at the 1.5 scenario, the pathway identified in the science report does, for example, indicate that we would have a share of renewable energy sources in the global electricity mix of 70 to 85%, just renewables. That is really massive by 2050. Electrification of energy demand for buildings and transport to be more than 50%. So again, massive transformation in those sectors. Reduction of emissions in industrial processes of over 90%. So again, just picture it. It's not easy to picture, but when you give it a try and you make an effort, you can imagine that this is really very transformational. Then to come a little bit to what have we done at EU level. because on the one hand, the details that are presented in the IPCC report are new, but again, the trend and the risks had been clear already for quite some time. Now, the EU has been putting in place a comprehensive framework in order to really shift the different sectors of the EU economy to a low carbon, as we call it, but also resilient, climate resilient pathway. And the whole purpose is really to give certainty as to the direction of travel for companies and certainly also for investors. For example, we are also using EU funds, so the EU budget, to support that transition. For the next multi-annual financial framework, we have been proposing dedicated investment funds for key infrastructure. For example, the Connecting Europe facility, also the Invest in You, which I hope you have all heard of, because this will have a specific sustainable infrastructure window. And in these funds, and also in the cohesion funds and the regional development funds, we have made a particular requirement, which is that any investment needs to be climate proof, as we call it. So there is a methodology to go through. Have you taken into account what climate change is coming, and to make your investment safe by having looked at that. We have also proposed that 25% of the MFF, of the EU budget for 2021 to 27, would need to be supportive of climate objectives. And this represents 320 billion euros. We have made an effort to link spending programs, and that is including the common agricultural policy and the regional funds, as I said, research funds, etc., to specific national plans that the member states need to develop with a view to 2030 on their energy and climate action that they will be taking in a so-called governance framework that has also been put in legislative terms. But at the same time, so we are trying from the EU side to put all these actions in place, but it's also very clear that, it's not EU budget or any other public budget that is going to deliver this transformation. It can support it, it can help accelerate it, but it's not going to make it happen on its own, because that transformation and those changes depend on private sector involvement and investment. Now, the way we see it, the role of EU legislation is really to help drive a kind of orderly transition. We have, for example, the carbon price, the price for a ton of CO2 in the context of the emissions trading system, and this price has been increasing. It's around 17 euros now per ton. And we see from that the most polluting or the most carbon intensive energy sources are already outcompeted on economic viability. From 2020 onwards, another example, all new buildings that are going to be built will need to be near zero. Very different concept compared to if you look at the buildings, for example, here in Brussels. Very different approach to how you build your buildings. In transport, discussions are still ongoing, but we have made proposals for more stringent standards on CO2 emissions, not to be confused with the NOx for the diesel discussions, but CO2 emissions as well will need to become much more stringent on that sector of industry. Also, local communities and economies need to look at how to become resilient to the impacts of climate change. We're very pleased that in the meantime, pretty much all member states have what we call national adaptation strategies in place. And we, from our side, we have an EU adaptation strategy that was adopted in 2013. We've just gone through an evaluation on the effectiveness and the added value of that strategy, and we will be publishing that next week. Now, just not yet finalizing, but an important other element that I want to emphasize is really the long-term vision. It's not, it is, let me say, obvious that, the IPCC report has confirmed that we have basically an unprecedented and extremely urgent challenge. I don't know if you saw that, again, the Secretary General called this the defining challenge of our time. And it is now that we need to lay the foundations to get to this carbon neutral economy as soon as possible, but in any case during this century. We have been, as I said, providing long-term certainty for investors. We have had 2020 targets in place already a long time, and now we have all agreed the 2030 targets as well, on greenhouse gas emissions, but also on renewable energy, energy efficiency, etc. And this should bring us to a greenhouse gas emission reduction over -40% by 2030, as the EU had committed in the context of the Paris Agreement. I've been mentioning the governance before, which is really an integrated approach where member states are no longer going to be looking at different policy decisions in different corners, energy on the one hand, agriculture on the other hand, climate-specific policy, again, in its own corner. No, it would be integrated up to 2030, but also with this longer-term perspective, mid-century, and in particular looking at how to finance the necessary investment and the necessary changes. And the Commission has a role there. We will be comparing member states' plans, making recommendations, looking at regional cooperation, etc. Now, in the Paris Agreement already, there is this long-term temperature goal. And the agreement itself says, please, all countries, look at this long-term perspective and please hand in, by 2020, a long-term strategy, or in there, I think it's called mid-century low-carbon development strategy. We are working very hard on that, and the Commission will come forward with a proposal for such an EU long-term strategy in a few weeks before we go to Katowice, to the climate conference, end of November. And the purpose of that is really to hand it for discussion, of course, in the EU institutions, but also across society at large, with all the different sectors that are going to be involved in order to make that transition. And ultimately, it would need to be endorsed by heads of state and government, presumably of the EU 27, in time for us to hand it in as the EU strategy in 2020. Now, the objective of that strategy is really to enable the EU to reduce its greenhouse gas emissions in line with the long-term Paris goals. The purpose is to really strive for, a more modern and competitive and, as I said, resilient economy. And also, and that is important also to keep in mind, a socially fair economy for all Europeans. Because, as I said, there will be so many changes and such substantial transformations that, of course, that will have social impacts as well in terms of jobs, losers and winners, etc. So the proposal that we will make end of November will be a comprehensive vision with the purpose of modernization of our economy, and that implies, the whole of industry and also clearly the financial sector. It will look at cost-efficient pathways to decarbonization, and it will include certain pathways that look at what we call zero net emissions. So pretty much to zero greenhouse gas emissions, and if we still have some greenhouse gas emissions, which could be non-CO2 gases, you would need to compensate that with carbon absorption in other sectors.
Mrs. Slingenberg,
yeah. I have some closing.
I have the very rude role of the timekeeper.
Exactly. So. I will finish, but I have a few closing remarks. So just to emphasize that, Europe is determined to implement its Paris commitments. There are estimates for 2030 that it will cost us 180 billion euros annually, additional compared to current investments. And that is also emphasizing the fact that we need this shift, a major shift in investment trends. I have explained to you the action we're taking at EU level. We have legislative frameworks, and importantly also the legislative proposals on sustainable finance. There, in order to come forward with the specifics on taxonomy, on benchmarks, on disclosure, the timeline is ambitious, but I hope that the context I just gave you kind of emphasizes the urgency for moving and taking action. We do need to make green finance the new norm, you said yourself, mainstream. That is what we're heading. Sustainable investments need to flow across Europe, but obviously also globally. And that would trigger millions of new jobs being created in this transition to a low-carbon economy. We have actually already gone onto that track very well. We have been reducing our emissions by 22% since 1990, but the economy has grown by over 50%. So clearly decoupling emissions growth from economic growth. So just to finish on the fact that we observe an increasing interest in the financial industry to go into this direction, and also renewed urgency. I mentioned in the beginning the Climate Week in New York, but before that there was a climate summit in California, and also the One Planet Summit that has been convened now twice by President Macron, but many other events. We have seen many interesting, encouraging commitments by companies and also investors. So the EU proposals on sustainable finance also try to pick up on many of those trends and issues raised by the market. So clearly, this is an ongoing discussion. I'm looking forward to hearing more expert views in the panel, but thank you already for your engagement and support, because what we want is the capital markets to be part of the solution to fighting climate change.